to me, it's like, hey, look, we're having a good run here. Why are you going to try to be a hero and call the top and get ahead of this freight train? I mean, look around you. Everything is working.
Welcome to Investing with the Boys. Again, just want to wish Shy a good health. Our man is down on the ground. He's sick right now. So this is Logical and I wishing you good health, man. Hopefully you come back next week. Also, someone got married. So congratulations. So we're going to be really excited to see Mr. Shy Buller come over. But back to the markets, man, I mean, the last time we met was 2 weeks ago. All right. And even though it was only 14 days, 10 trading days, like a lot's happened. We went from everyone being outlandishly bearish to, let's just say people a little bit skeptical and everything. But we've gotten a lot of data as far as CPI goes, inflation. We're recording today on Wednesday. We just got CPI this morning. It looks like the Fed is most like 100% chance that they're going to cut next Wednesday, which is the FOMC meeting for September. Question is not if they're going to cut. The question is, how many times are they going to cut? So we'll see, man. How are you doing, Logical? How's everything going?
Everything's going great, man. Portfolio just hit an all-time high again. As you were saying last time, all-time highs are typically clustered around other all-time highs. So it's never a good time to be bearish. You won't know it's the top until after the fact when you see the markets and the charts break down. So to me, it's like, hey, look, we're having a good run here. Why are you going to try to be a hero and call the top and get ahead of this freight train? I mean, look around you. Everything is working. It's beautiful. I love it. I mean, who hates this market? It makes new highs every day. And I think, maybe this year in particular is a little bit trickier for some people than others because like we've talked about in past episodes, we said 2023 was the year of Mag 7. 2024 was the year of popular growth names, like the really popular growth names. We're talking AppLovin, Palantir, Reddit, etc., Hims and Hers Health. But this year has been kind of a weird year. I love weird years. I'm a weird guy. I have weird holdings. And so for me, it's been a beautiful, beautiful year, pushing 115% year to date. It's just been awesome. And the best part is, all the places that I pay attention to, bios, housing, rate sensitive sectors, small caps, they are just now beginning to work. IWM just hit above 240, hasn't seen those 245 levels since last year around the election time.
What's the all-time high?
I think it's like 245, which happened basically last
year.
Last fall. Yeah. So, that's the thing, right? We haven't even broken out. So basically for the last 5 years since like COVID times, IWM has been flat. It's gone nowhere. Now it's a garbage index, but when the IWM is rocking and rolling, that is a good time. That is a good understanding of the macro backdrop, the market backdrop that we're dealing with. That thing hasn't even broken out to new highs yet. So imagine what happens when we get clear blue skies ahead. XBI still also below its lows of 105-ish in late last year. And also, it was at $172 back in 2021 February. It's sitting at $95. We are not overextended in that sector. You talk about housing, you talk about XHB. These sectors are just now starting to break above their 200-day. The SPY, the S&P, all broke above their 200 days very quickly on that V-shaped recovery after the tariff tantrum. But it's just now that we're starting to see all of these other major sectors starting to participate. I love breadth expansion. The rotation is the lifeblood of a bull market. There is a ton of opportunity. And I know we keep getting those quotes, oh, the market's so expensive, blah, blah, blah. Yeah, the market as a whole on an average basis, because we're so top heavy in the major stocks, which by the way, deserve a premium multiple. We've chatted about that. But if you look around the SPY, 493, the XMAG 7, all these other areas of the market, there is a lot of value. And guess what? Right now, we have an accommodative Fed where they're willing to lower rates. We're going to start seeing QE. That's going to be more liquidity in the system. We're going to be able to support that deteriorating labor market that we've been seeing. So, you know what? This party can keep rocking on. And, I think we'd be in a lot different situation if this was, let's say, 2021. At the end of that bull market, it was a very different scenario. We were leaving a zero interest rate era. Right now, we're still sitting at 4.25 on the Fed fund rate. we have a lever to pull to keep this party going. So I think before people get too, cute about calling tops, the top can go a lot longer and a lot higher than you realize. And that's what it feels like right now. Everyone's waiting for a pullback. It is a lockout rally. We are melting up, and we'll get into it in a second here. I want to pass to you and get your thoughts, but obviously those Oracle results were incredible to move a $600 billion company 40% in the day. I mean, this is a party. Anyway, Sam, let me give it to you, brother.
That was wild. And the one thing about Oracle that there's a lot of debate over it, right? I'm going to bring up a chart in a little bit, but there's a lot of debate on whether those numbers are real or not. And we go on the spaces every single day. And you brought it up. Good. Like, it doesn't matter. Like, it doesn't matter if those numbers are right or not. Clearly, they matter today, right? So you're going to get a lot of people on one side, the other side saying like, oh, I don't know. Oh, like, what was it? Someone said on Twitter, like, oh, hey, you want to buy my products? Okay, let me add that to the backlog and so on. You know what I'm talking about. Like that, it doesn't matter if those numbers are real or not from a short-term perspective for the market. Maybe later, once we start to see some conversion of the backlog into actual tangible revenue or billings that they did issue the client. But as far as we see right now, the backlogs for Oracle went up 359%. Larry Ellison is now the richest man in the world. The richest OG in the world. Again, I take it back. I don't think he was rich in 2000, but the richest person in 2000. But from what I've read was that Larry Ellison owned like 23% stake of the company back in 2000. And over time, while the company was buying back stock, he was accumulating more shares of his position in Oracle. So now he owns 43% of the company. The company's worth $800 billion today, about $800 billion. He basically has almost $400 billion in net worth. Like, and the guy's like 80 something years old. He looks amazing, by the way. That hair is,
I can't believe he's 80. Point. Yeah.
Neither could I. And hey, I don't want to set anything aside. His wife is 31 years old, not going to judge, or 33 years old, not going to judge, whatever. But like, clearly he is the richest man in the world. His wealth, I think he went from like the 7th richest person in the world all the way to the richest man in the world. Elon Musk, of course, like I'm not gonna lie. Like, if I had more than $1 billion, I'll be happy, but might hurt the ego a little bit, just a little bit. We'll see. But at the same time, like, Tesla was up like 6% today. Why? Because the 10-year is falling off a cliff right now. The 10-year is at 4% right now. I don't know if it actually creep below 4% or not, but that alludes back to what you were just saying, man. Housing stocks are back in play. They've been back in play. You've noticed that for quite some time because the market was sniffing that out. When the 30-year drops, mortgages drop. When the mortgages drop, people come back to the housing market. The market's not going to wait until that happens. It's going to front run it. But at the end of the day, the market is usually right at the end of the day. They might be wrong initially, but they're usually right at the end of the day because that's what gets priced to the market the closer we get to that absolute time period. The housing market is coming back. It totally looks like it. The 30-year is back near around 4.5%. Rates, 30-year mortgages have had their largest drop in the rate on a day move in a long time. The market's coming back and it's front running that, right? So how do you stand in front of that speeding train and just say, guys, this is the top, right? None of us in this stream have said it. Even Shai was saying it too when he was in the episode a couple episodes ago, but like, you can be cautious, but it doesn't mean that you need to position yourself to be like completely short the market or 100% in cash. That's a loser's game. You and I both know timing the market over a consistent basis is a loser's game. That's why you have signals. That's why you edge it and so on. But at the same time, even from a long-term perspective, you position yourself in leaders in every secular trend industry that is growing. Take, for example, semiconductors. NVIDIA was the leader and is a leader when it comes to GPUs, but general graphical compute. But when it comes to specific sectors, as in niches, like let's say application-specific circuit integrations, application-specific integration circuit or ASIC chips, which is basically GPUs that are designed for specific tasks, that is where there are other leaders in that industry, which NVIDIA is not the leader in the industry. It might be Broadcom, which she had crazy exposed earnings, or it might be other companies as well. But when you think about Oracle is a data center player. They've been a software player for a long time, but Oracle is becoming a data center giant. They build data centers for multiple clients on a very fast scale. I don't want to get into it yet, but I'm just wondering what your thoughts are as where is the market, do you think, seeing leadership in? Of course, we were talking about housing and everything, but like, where do you see leadership really heading toward in the market right now?
Yeah, I mean, I think it's going to continue to be in the data center names. And ultimately, just because you saw the Oracle story is the biggest story by far this week. The second biggest story was a name that you love, which is NBIS, signing that $17 billion 5-year deal with Microsoft. This is indicative that the demand is not slowing down. Let's take a step back and think about the overall market from an economic standpoint. The GDP numbers. We are seeing a deteriorating labor market. We're seeing potentially a slowing consumer, potentially. But what's holding up that GDP? It is AI CapEx spend. So that continues to be the major story. I don't care what anyone says. That is continuing to get us to march, further than we thought we would. So, while we have this weakness elsewhere, the AI is picking up the slack, and hopefully we begin to actually start to see the efficiencies of all that investment, the return on that investment, to be able to, justify all of this spend. And then maybe we never go down again, right? Because we've been talking about, is this 96? Is it 98? Is it 2000? The truth is it'll depend on the return on this investment. So I still see data centers as a very big theme. We haven't even really gotten to the point of inference and what that could mean from a capacity standpoint. I think a big constraint we have right now is energy. I think energy is something that I'm thinking about a lot. How do we get, and maybe it's nuclear, right? And maybe that's the most sustainable, but that seems like far out. What are the solutions in today's market to help, data centers get that extra capacity to deliver on terawatts of energy for these data centers? That's what I'm thinking about right now. That seems to be the bottleneck. So that's something I think about a lot. Obviously, like names like Bloom Energy were up a lot with their deal with Oracle. But yeah, I'm thinking a little bit harder about that. I had a few names before, like IESC and Talon Energy, and those things have just rocketed. And I'm so silly because I didn't hold them long enough, and I have deep regret about that. But I am trying to get a little bit more data center exposure. Speaking of, there is a stock that I re-entered yesterday, which I think fits two of these major themes perfectly. It's Galaxy Digital, GLXY. I know it's a very popular FinTwit name. It's as annoying as trading as like a Tempest AI. It's extremely popular, highly volatile. People are in and out. Momentum traders blowing out of the stock. It goes like, you look at the candles on thing, it's disgusting to hold. But I think about where we are right now. There's two parts of this business. One, I'll start with the crypto part and then come back to the data center part because it's a little bit more compelling. But there is an entire crypto exposure to this business, obviously. And right now, I think that we're at a point where Ethereum, Bitcoin, they all look like they've been consolidating for a few weeks. It's been a bullish consolidation. I've been seeing a lot of calls come in for ETHE, ETHA, IBIT. So I think that it's possible that Bitcoin is and crypto is ready to take that next leg up. So I think from a crypto exposure standpoint, Galaxy is going to benefit. And then we take a step back and we go back to the data center exposure, which is what I really want. And also, sorry, real quick, I want to add more crypto exposure after this consolidation, but a lot of things have already run a lot, like the Coinbases and the Ethereums. And I feel like Galaxy Digital hasn't really run enough yet. And it has that bigger second tailwind of data center. So that's the second piece of this business. And they have, how many is it? It's like 2.5 terawatts or 2.7 terawatts of capacity that they're building out in their data center in Texas.
That's pretty insane.
Part of their Helios. And so they've only been, I believe, approved of 800 megawatts of energy, which they've already inked a deal with CoreWeave. So that's already ready to go once everything's set up for CoreWeave. So they have, I know people talk about IREN and CIFR, and after this NBIS deal, those are going to be the major players. But Galaxy Digital already has this inked partnership with CoreWeave that's going to give them a ton of revenue and a ton of EBITDA. So just on that project alone, it's probably very undervalued. And if they're able to lock down more of that energy, then they're able to lease out more of that data center capacity. So that's what I was talking about from a bottleneck perspective. So yeah, I think, this is working on two themes, data center and crypto, and those continue to be major leaders in this market. So yeah, I'm really happy with that. Sorry, do you have any thoughts on that?
No, I mean, while we're on the topic, because we saw the other day and you're talking about Galaxy Digital, and there's other Bitcoin miners that are turning into basically AI data centers, right? And when I say AI data centers, I mean they're very graphical processing unit or GPU heavy. We could take IREN, for example, also what used to be a Bitcoin miner, and they've actually been a pretty profitable Bitcoin mining business. Like they're actually a profitable company sustaining themselves based on their mining business. And they're speccing out, I think it was like about 2.5 gigawatts by the end of by H2 of 2026. So 1 year from now, they're expecting a massive growth in terms of data center capacity. So far today, what we've seen is that you've only had select data center companies or Bitcoin mining companies turn into data center companies that were able to sign up contracts with major hyperscalers, right? You saw TeraWulf sign up a contract with Google, and Google actually has stake in TeraWulf as well, and that's been on quite a run lately. But IREN has not yet. And I think the reason why it's being ran up right now, because it's actually sitting at all-time highs again, is because they're waiting for that news that they're going to be able to provide it. So you have these companies providing data center compute, but they need a large contract to fill that demand. And there's also CIFR as well. I don't know the exact fundamentals behind them and everything, but we've talked about it several times, even offline as well. Is that you have these companies that are providing compute to meet demand. Microsoft signs up with contracts to build out this data center. So does AWS or Amazon. So does Google, Oracle, and whatever. But these companies cannot build the data centers to meet the demand that's flooding through the doors and is going to be coming. That wave is going to come where inference becomes a very big deal, which it already is a big deal today, but it's going to keep on growing even more massive. Semi-Analysis released a chart basically saying that AWS is going to reaccelerate above 20% growth based on their modeling, especially after AWS, I think it was about a 1.3 gigawatt data center they're going to build out specifically for Anthropic. Anthropic is a large language model company that demands a lot of inference compute, right? So if the big players can't meet the demand, you're going to turn to the smaller players. And that's the reason why NBIS got that $17.4 billion contract for 5 years with Microsoft, because they had to turn to the smaller player. I would say out of all these companies, NBIS is probably the most reputable one of all of them. They have the best track record because it extends out to multiple decades. But on top of that, they've already proven they're a leader in it. And then you see them issuing debt over and over and over again. People are getting scared because this is an expensive business, right? Microsoft isn't saying, here's $17.4 billion, go ahead and do it. This is a contract by whatever terms that's beyond my pay grade. But at the same time, they need to build it in order to build Microsoft. And in order to do that, they need to raise capital to do it so they have money to be able to pay all their contractors and everything to build it out for them. That's why they're raising capital. And that's the reason why NBIS is pulling back a little bit as it is today. It's down a few percentage points today. It's actually pulled back from its recent all-time high around $100 after the news. That was an intraday all-time high. And that's the reason why people are scared. How much money is NBIS going to inject into its business? How much debt how much dilution are they going to do to shareholders? Well, I'll tell you something, whatever it takes. That's what management has said, whatever it takes. They will raise as much debt as they need to meet their business. It's not a matter of if they're going to raise debt. It's a matter of when. And we saw it today. I hope the market freaks out over it because guess what? They already have a proven track record. They signed up a deal with Microsoft. I think the bigger question here is, can Microsoft actually pay that $17.4 billion out? The other question that a lot of people are asking is Oracle actually signing up, or are they going to start billing for 359% of growth in terms of their RPO? Well, that's going to be the next question that's going to come to the market. And I think skepticism is going to arise from that. What are your thoughts on that, by the way, as far as are these numbers real or not? But not obviously from price action because the market believes it's real, but do you think that this is going to continue going and it's actually going to play out? Or do you think this is going to be one big mess later on?
Yeah. Let me comment on one thing and then I'll get to the Oracle topic. Just on IREN and CIFR. First off, it pains me when I just looked up CIFR and it's almost $10 because I think I sold it at $6. So that was a pretty big blunder. IREN, I basically went in for a quick trade on some options and I was like, oh, I made 100% on this like small position. I was so happy. And now I see that it's up like, it's up like,
Yeah, it's crazy, man.
it's, I can't believe to see these stocks the way they're trading. What I can say is, and I think Stock Talk was mentioning it the other day when we were on the space, was like, the problem with a lot of these stocks front running the deals is that if a deal does not come or is not as favorable or as big as they think, then the stocks could be down a lot because right now they're pricing in that deal. So I wonder if IREN and CIFR, I mean, right? Or, I mean, it's at all-time highs right now. Like IREN has now broken it above its, 2021 IPO highs. So, it's blue skies. So, it's possible that this thing has a lot of upside. Who knows, right? It's kind of hard to understand and quantify these things before the news actually comes out. So I don't know, but what I can say is that data centers and HPC revenues saved these stocks, because I know you mentioned that IREN has a profitable Bitcoin mining business, but that doesn't make a lot of sense to me. To me, it is a commodity business. There's not much to it. Anyone can enter crypto mining. And every 4 years, what happens? You get a halving, which means that you mine half as much Bitcoin for the same amount of work. So every 4 years, essentially your revenue forecasts get chopped in half. So and again, you have to think about it. 19 million of the 21 million Bitcoin have already been mined. Most of the Bitcoin is already out there. So the amount of incremental rewards are very little. The Bitcoin mining business is not a sustainable business model, in my view. I think there'll only be like maybe a few winners that'll make it like worth continuing down that path. And I know you said it's profitable, but anytime I looked at the like operational cash flows of businesses like IREN and Riot or Mara or whatever, they had extremely negative cash flows. And when you like back out, if they don't sell the Bitcoin, then and they're doing a HODL strategy, then they're actually having really negative operational cash flows. So it's a really energy intensive business. The revenues are getting cut in half. It doesn't make sense to me that company A can make more money than company B. I never understood that, nor do I buy it. So that's
why miners, like the traditional miners like Mara, Riot, and CleanSpark, they're still trading at their lows, and meanwhile Bitcoin's up like 300%.
Right.
You're right. It is a commodity business, and I think that these other players like CIFR, GLXY, and so on, like TeraWulf, IREN, they're all transitioning because they understand
data center
but
business.
Also, yeah, but there's also a narrative attached to that as well, and so is sentiment. So these things going to run up. But yeah, man, sorry to interrupt. I know you're going to jump onto something else.
No, that's correct. I think right now, I don't know how much I believe the Bitcoin mining side of these businesses, but guess what? It does not matter because the data center business clearly has enough to go around. And I think this leads perfectly into the question about Oracle. Are those numbers real? And like you said earlier, does it matter right now? No, because the market is going to front run that. It's going to look at those projections and assume that it is real and say, okay, this is the second wind of the AI bubble. And is it a bubble? If we're going to actually start to see revenues, right? I think what the mistake that some people are making, again, that we mentioned last time, is this is not 2000. In 2000, again, I've always used this example, but Amazon IPO'd in 1999. I didn't have my first package in my hand till 2012, 13 years later. When we're talking about data centers and then the AI applications that are built on top of them, they're going out to consumers every single day. My use of AI is exponentially increasing every single day. So we are seeing value today immediately, and then we're getting, efficiencies, etc. Now, I don't know what the future state of the labor market looks because of that. It could get, cause other issues and all that stuff. I'm not saying that, but there are real revenues. There are real profits. There are real operating expense reductions here. So, whether Oracle is real or not, the point is that the AI TAM, or whatever you want to call it, is much larger than people realize because it's actually expanding every single day. So I think that market is going to look forward, and the market is going to keep saying, I think we can keep betting up these AI stocks until comes that day of reckoning where the hyperscalers or whoever it is really start to show declines year over year. We are not there yet. These are cyclical stocks. I think when we had that DeepSeek moment back in January, that felt like the very first time that we would have the potential of declining revenues, declining CapEx, which would affect the entire ecosystem. But as you can see, those numbers have just picked back up, and the CapEx numbers are just blowing the old guidance out of the water. So people are spending. Now, I think if you studied past cycles, the issue is that you want to run away from a sector like this when the spending is so high, because it's typically a bad time to receive capital returns. That's just how capital cycles work. But it doesn't mean that we won't go up a lot higher before the end of that cycle. So I don't think there's a point in trying to be a hero. I think eventually this cycle will come to an end. The amount, but the higher we go straight up, the faster we'll come straight down. So there will be an end at some point. I don't necessarily think that this Oracle is the end of that. I think it could be the beginning of the melt up phase of this AI thing. And then it just kind of comes down to, are the efficiencies going to be realized in a fast enough time to outpace the bubble-like returns that we're seeing? Or is it all going to come crashing down to in some sort of correction? And I don't think we'll have like a 70% crash like we did in 2000s. I don't think that. There's a lot of ways that companies that are gushing cash flows can buy back stocks and stabilize their stocks. And we have 401ks buying these stocks every day. And so, could you still have a situation like 2022 where Meta's down 70% and Amazon's down 55%, but the S&P is only down like 25% or something? Yeah, I think so. And the Qs could be down more than that, 34. Yeah, but I don't think it's going to be as crazy as people think, because we're actually inflecting to like this new reality. But I'm not going to sit here and say that we can't crash in markets. I just think that we would probably need to go a lot higher first for me to feel like there was a heightened risk. I don't actually think that we're at super bubbly valuations. And if you're constantly quoting, PEs and comparing them to historical averages, I don't think that's the argument here to crash or pop the bubble.
Yeah, I mean, who knows? I mean, maybe 2 years from now, we're going to look back and be like, man, it was so obvious we're at a top, right? You're going to have recency bias. You're also going to have confirmation bias as well. But right now, I think when it comes to people saying that the numbers are fake, I think there's a lot of nuance in that statement, because then if that's the case, I would like to know, are you invested in any of these companies to date, right? Like, I'm not going to go over here and say like, people who are saying that we were saying numbers are fake are not invested in the market, which, might be the case, whatever it is. What I'm saying is that not believing is very equivalent to not having the conviction, right? So if you don't believe it, it's very likely you don't have conviction what's actually happening, which obviously is the same thing. But also my question is like, are you making assumptions that these numbers are fake, or do you have tangible evidences that's the case, right? So it's a fact, right? People, even though the RPO is listed on there as far as backlog goes, does that mean that is going to be billed? No, it doesn't, because whoever the biggest clients are could call Oracle up and just be like, we decided to cancel this contract. They got to take it off the backlog. But the market is following the rate of change, not necessarily the absolute value, right? So let's say that they grow at 359% next quarter. Is Oracle going to go up 40%? Likely not. In fact, I think Oracle is being priced that it's going to continue doing that regardless, right? This is kind of like the NVIDIA moment that we had 2 years ago when NVIDIA was around $300 pre-split. And then it had its crazy quarter and it went to like $500 or something like that, right? Oh, no, I'm sorry. It was around like $368 and everyone was skeptical. And then it was around like the 400 something region. And then it had its crazy earnings and the stock essentially doubled in the next couple of weeks.
Well, they beat their guidance by 50%. Yeah. It was nuts.
But it was also because everyone didn't believe it was true coming into the earnings. And then they had the earnings and it was like, whoa. But I still remember there were a lot of people who out there who didn't believe it was happening. That was 2 years ago. Now NVIDIA is the largest company in the world at $4 trillion, still sustaining 50% plus growth on insane $38 billion of revenue. Don't quote me on that exact number, but it's somewhere near the $40 billion figure, still growing at 50%. Who would have thought that? Growing at 150% when its revenues were around $10, $12 billion was something. But now they're around $40 billion and they're still growing 50%. And that is billed revenue. That is revenue that came onto their sheets, right? So when that happens, when people say that this Oracle thing isn't real, well, okay, maybe you're right. But what if it is? Or what if Microsoft comes up with the money and is able to pay NBIS? What if NBIS is able to start billing out this? That means NBIS is very undervalued. That means that contract alone is worth almost as much as the company is today. When NBIS closed at $15 billion on Tuesday and that news came out, that contract alone that's displaced over 5 years is worth more than the company in its own. That's why the stock went up about 50% that day. You had another story that came out recently. I don't want to get too into this. This is going to come up today, right? There's really no way we can avoid this topic because everyone's talking about it today, is Opendoor. Opendoor, actually, how much is Opendoor worth right now?
Too much.
I should actually check. I think too much. They're worth they're about $8 billion, $7.74 billion as of close today, right? So Opendoor, before today, the stock is up like 60%, right? It was trading at $5, so about cut in half the way it is today. I don't know. I don't know exactly how much it's up, but it was trading about $5 yesterday. The stock was worth about $2.5 billion. Okay, actually, no, I think it was more like $4 or $5 billion, whatever it is. They were trading at 58 cents just last June, right? Less than $1 billion, right? Everyone thought Opendoor was going to go out of business. And I'm not saying this because I'm bullish Opendoor. I'm saying it because you had a lot of people not believing what was happening, right? And not only did they not believe it, but they were shorting it. And then coming into today, before today, you had the COO or Chief Operating Officer of Shopify joining as part of the board and also the Chief Executive Officer of Opendoor. So now you take someone who has a very reputable background at bringing Shopify as one of the best companies, basically revolutionizing the back-end processing for online e-commerce businesses. Now the CEO of Opendoor. It's not about what he did at Opendoor because he clearly didn't do anything yet. It's about what he is going to do. And that's why the stock is up so much, because now this is turning into a crazy story where you have someone who's actually changed the world by working for a company that changed the world, now part of Opendoor. So you have the fundamentals likely about to change, the market's pricing then. But then now you have the positioning that everyone who is short Opendoor had to cover their shorts overnight. And the stock is up 50, 60, 70%, whatever amount it is, overnight, because everyone was not positioned for that. Everyone thought the opposite was going to happen. Everyone thought Opendoor topped, but it didn't. So you have the technical perspective of the positioning. You have the sentiment perspective as far as what people think is going to happen. And now you have the fundamental perspective, shooting the stock 100%. I mean, who knows, man? Opendoor could have topped today. Who knows? All I'm saying is that when people don't believe something's going to happen and they're not positioned for it, you get Oracle up 40%, $200 billion in one day. You get NVIDIA up 30% in a couple of weeks, or maybe 1,000% in just 2 years. That happens with NVIDIA. You have AMD come back from $80 all the way back to $150 in a matter of a few months. You have NBIS up 50% a day because people don't believe it. They're not positioned for it. And boom, they get smacked in the face because that reality is starting to come to fruition. I'm not saying that Opendoor is going to go to $82. I mean, who knows? That'd be crazy if it did. But what I'm saying is that people were not positioned for it. And then you get a freaking $200 billion add-on for a market cap of Oracle.
Yeah. Here's what I'll say. This move is not justified, but that's okay. It's the meme
it doesn't
of
matter.
this bull
The market
market.
doesn't care.
Yeah, no, I don't. I'm not saying the move happened. I'm just saying it's not justified, fundamentally speaking. But neither was GameStop, and that went 100x. So like, this could go 100x, and I'm not disputing the fact. I'm not. Well, I mean, dude, it's already up 12x. I mean, it goes up another 8x, and this is 100x, and Eric Jackson wins the lottery, right? Look, I'm not disputing the fact, and if anything, you're always going to have like this liquid leader kind of some story. Think about GameStop. It's like the perfect Opendoor comparison. That thing literally went up 100x from basically a stock that was left in the dirt. I mean, it kills me too, because I remember reading that. I remember reading the Eric Jackson post saying, this is going to be a 100x stock, $82. And he posted that when it was at 82 cents. And I look at the after hours action, it was like at 96 cents. And I was like, I should just buy like 1 or 2% of this thing, and just send it. What's going to happen? It's going to go to zero. It's not going to go to zero. And I just checked and it is $10.52 today. It was up 80% on the day. I mean, and the volume is higher than any other volume, except the day that I went to $5, I guess, a few weeks ago. But the price is also higher. So I'm just like in shock. I have taken aback. I don't have words for this. I'm speechless. It's going to go higher. It feels like you don't top on a day like this. I think it goes higher. And this market is strong and the market's in kind of a melt up mode, and it uses Opendoor as like this liquid trading Ponzi scheme. And I don't believe in this business model at all. I don't think iBuying works. I think that real estate is very dependent on the specific residential area that you're in. And I think that's why realtors will still always have a place in this business, because it's a really difficult market to like just automate. Like, I understand like Shopify's coming through, but Shopify is like automating like me buying t-shirts or something from some random third-party retailer. You're talking about buying $1 million homes. iBuying doesn't work. Zillow canceled their iBuying. Redfin canceled their iBuying. It didn't work in a 0% interest rate environment where everyone's house prices were going up. I don't know how it's going to work. Maybe it'll work for a little bit while rates are coming down. Maybe their inventory currently for a few quarters as they churn that inventory and prices go up as rates come down. Maybe it's going to look like an illusion of like them making money. But for a long time, remember that this business was selling houses at a negative gross profit, which means that they were losing money on the houses that they were selling. That's before they take into account all of their operating expenses. So they're very negative on the P&L.
You know what was interesting? I mean, as we're talking about this, like, and Eric Jackson is also associated with this one, the Carvana as well. Carvana, I forget, they were like trading the single digits. Now they're at like, let me take a look at this chart over here. They're $400, dude. That was at a time when the auto market was just going downhill because rates shot up by like 5% in a matter of a year, and the auto market just froze, right? And you had a company like Carvana that sells used cars for people flourish from a really crappy auto market. Obviously, the auto market still has not recovered yet, but you had a company that was able to turn around the ship. I don't know any of the other fundamentals besides that one. I know the stock price, it is way higher than it was before. What if that happens with Opendoor? I'm not going to sit over here and I'm going to be like, Opendoor is not going to go further, because you clearly don't agree as well. You think it's going to go up. I think it's going to go up as well. But at the same time, like, I don't like to be dismissive in an absolute, because we don't know what's going to happen, right? Today could have been the top of the market. Today's Wednesday, September 11. Thursday. I kept saying Wednesday, Thursday. We usually record on Wednesdays, but today's Thursday. And, God bless the US, 9/11. Rest in peace for people that died, that went into the building that day. I lived in New York myself, so I was able to see a lot of that, not firsthand, but through the very close second degree. But what if this was the top of the market? We're going to be singing a different tune, and I think that a lot of people are in disbelief. And this isn't just with Opendoor; it's with everything. It ties back to the fundamentals we've been talking about for a lot of the companies we've been talking about for months, right? Let's take, for example, Magnite. And I know you're very big in this one too. And we can tie that in also with other ad tech companies, because we saw TTD this week is basically making multi-year lows. And it's making multi-year lows on the back that Amazon ads is going for a TTD's business in Netflix selling ad real estate. But more importantly, you had TTD, which was the game-changing company. Jeff Green changed advertising technology to what it is today. He's not leading it, but he changed it, made it a more automated software-based process that basically handles all these transactions and auction real estate for advertising real estate in split seconds, right? He changed that entire game. But that company that changed that game is no longer the leader in the industry, because it is becoming a commoditized market. And then you saw TTD, it's at like $45 today, dude. This is the same price it was trading at back in like 2022. I would have never thought this was going to happen, but neither did everyone a year ago. And that's like the crazy thing that's going to happen is like, dude, where are we going to be a few years from now? Where are we going to be a year from now? Who knows? What if today was the top of the stock market? I think a lot of people are asking this question. It's making them scared. But like you and I are saying is that like, dude, you can't invest, you can't buy whatever it is based on the fear of what's going to happen. You got to basically, it's a layout of probabilities, right? Like how many times when you're doing a trade do you think about probabilities?
I think it's all about risk reward and calculating what's your upside versus your downside and the probabilities of those scenarios playing out. That's expected value return.
Yeah. Yeah,
I mean, look,
exactly.
yeah. I mean, look, I think it's a lot easier. I think that you and Shai, and especially Shai, is very good at paying whatever cost, whatever premium valuation for the leaders in the space. The tricky part about that game, and which has a lot more downside, is when the leader turns out not to be a leader. There's a lot more downside in that scenario, which is why I'm a math guy. That's my background. And I like to pay attention to valuation because it gives me some sort of margin of safety to the downside. And I believe that if you take care of the downside, the upside will take care of itself. So I'm very valuation focused. I still think that works. Even I know in a bull market though, you want to own the leader stocks and you could be a lot more lenient with the valuations you're paying. But I always said that was the main issue with Trade Desk. I actually don't think there's anything wrong with the Trade Desk's business. I just think that the valuation was way too high for that business. And that's what it came down to.
It's still not entirely cheap, but at the same time, I think it's the market was giving justification for its premium valuation because they were growing so quickly, because they were leader and because they're expanding margins. But once that stood to a halt, you saw Trade Desk go from $130 all the way down to 80, 70 something dollars overnight. And then now we're trading at $40 today because it's continuing to not show up. Like that's the issue with like turnaround stories, man. Turnaround stories is a major bet that they're going to turn around the ship. And people who are buying Trade Desk, it's like, you better have the conviction because nothing is saying that this is the bottom for Trade Desk.
You know, and just to kind of end it here, because I know we got to end there in a second, I just want to kind of round out that thought is like right now, there's a lot of opportunities and a lot of stocks that got killed on this recent earnings. And I was doing like this whole bottom fishing thing that I was talking about constantly. But after a couple of weeks, if these stocks have not been able to rebound, they're just kind of left for dead and they're going to dwindle. And it's going to take a catalyst to change sentiment for investors to pile in. And I'll wait for that volume to show me in the price action to get long this stock again. There's a lot of good stocks. I talked about PROCEPT Biorobotics and I just did not hold it because as the stock continued to dwindle at the lows, I love this stock. I love this business, but short interest is actually ticking up near the lows and I don't like that. So I need a little bit of like, I don't need to be a hero and be the first person who buys this stock. I could just buy it 10-20% higher and ride it for the rest of the real tailwinds. But yeah, I think just something like a Trade Desk, right? Like it's going to take time for that sentiment to change. So there's no need to be a hero is all I'll say. And you could always just buy the stronger stocks for now. And yeah, that's what I've been doing from a portfolio management standpoint is like, hey, you know what? I took a stab at this. I'm down 5-10% on this position, cut the loss, book the loss, write off some of my gains, rotate the profits into similar exposure in a stronger name in the sector, and just let it rip in the bull market, you know? But yeah, that's all for me today.
Yeah, man, for sure. I mean, I agree with that. You know, there's different ways of playing the game and, you know, there really is no one right way of doing it. And I mean, clearly you're up 114% year to date where I know you're beating the stock market, right? I can't really tell if you're beating the stock market. Just a little bit.
Yeah.
But no, it's been a phenomenal year and it's doing great. We have a lot, probably a lot more to talk about next week as well. You know, are you still going to be out next week? You're going to be around?
I won't be here next week, but Shai should be here. So you guys will be in good hands.
Okay. Sounds good, man. Next week, thankfully, though, is a quiet week. It's going to be one of the first weeks where I don't have anything reporting. So it'll be nice to get down and dirty for some of those earnings reports that I missed. But we also have FOMC next week on Wednesday. That is when the Fed has a basically 100% chance they're going to cut at least 25 basis points, but about a 10% chance they're going to cut 2. I'll tell you something. They cut 50 basis points, like the market's going to go up. Like there's no way that is not going to be seen as bullish. After that, we'll see. We'll see what happens after that. It really depends on the speech. But great talk, man. And thank you all for tuning in. Appreciate you in this episode 22 and talk to you guys later.